And we're live. Hello, 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 everybody. Welcome to this VC Lab info session. I'm super excited to speak with you today. We're going to use this webinar to answer all of your questions about the VC Lab Accelerator. If you were anywhere within the application process, happy to sort of help you with whatever questions you have, and so on and so on. So before we get started, my name is Mike Suprovici. I am the head of acceleration here at VC Lab. And, VC Lab is the leading accelerator for venture capital firms. We help launch enduring venture capital firms. And I'm going to share a brief presentation with you today about how we do that. And then we're going to spend the rest of the call just answering your questions. If this is your first time joining us for an event like this, feel free to introduce yourself in the chat. I see Rathana has introduced yourself. Hello, good to see you. Introduce yourself in the chat. You can put your LinkedIn in there. That's fine. Okay, but don't, if you're like working on a fund or a firm or something like this, do not put your thesis and what you're working on. There's like serious general solicitation issues with that, so do not put that in the chat. So just say, hello, my name is Mike. You can put your LinkedIn, that's fine. If you have questions for me, there's a button at the bottom of your screen. It's called Q&A, and that's where you would go ahead and ask any sort of questions that you have, and you can also upvote them, all right? But just so if you're sort of joined a little bit late, just know that I'm going to go through a brief presentation just to ensure that everybody's sort of on the same page, preempt several questions that may already come up and so on. So let's kind of wait a little bit until we get those in. But if you want to get them in now, it's fine too. Just upvote them and then we'll go from there. So hi, everybody. Let me go ahead and quickly share my screen and let's get going. All right. Awesome. So welcome to this info session. Just so we can kind of get on the same page, VC Lab is an accelerator, okay? We help new managers and emerging managers launch their firms. We help launch enduring venture capital firms, not funds. Enduring venture capital firms, not funds, okay? So just want to make sure that that's very clear so that you can kind of apply to the right place. So if you just want to mess around and do like a fund on the side, no problem, maximum respect. This is not what this is, okay? This is for basically founders of VC firms, okay? And we offer a free 4-month program to help you close your venture capital fund, the first one or the second one. And it's become the leading program for doing so, and I'll go ahead and cover this. So just to put this sort of into perspective, if you're kind of doing this on your own for a new or emerging manager to perform a first closing on their fund, it takes roughly 12 to 24 months. Most people take 24 months. And there's a variety of reasons for this. A lot of it is just because they're kind of doing things out of order. They're learning things kind of on the fly, and so on and so on. With the VC Lab Accelerator, people are performing a first closing in roughly 6 months, sometimes less. 5.7 is actually the average right now, but sometimes less. Okay. This is a closing program. Okay. This isn't a place where you sort of learn about venture capital. This isn't a place to get educated on VC. This is, again, a place for founders of venture capital firms to come in and close their fund. And it's the expectation that at the end of the program, you're going to do a closing. So you're going to get money in the bank from limited partners as you go through this process, okay? And this works, okay? You're applying for Cohort 13, okay? So we've been doing this for a long time, and with every single cohort, we improve the curriculum, and the closing rates are getting faster, okay? So just wanted to put that into perspective, okay? So the program is packaged together with a series of deliverables and sprints. But on a high level, we're going to spend month one making sure that you basically have the right sort of thesis that's working, that limited partners are resonating for. right around sort of like week 3 and week 4, you're going to start getting limited partners to sign up for your thesis and sign up for your fund and give you commitments and things like this. And over the next 2 to 3 months, you're going to continue to scale that up, continue to scale up the limited partners that you're sort of scaling, that you're sort of talking to and things like that. And you're going to perform a closing by month 4. Okay. And so everything is sort of packaged together in the correct order, right? This is the reason that people take, 24 months is because they do a lot of stuff out of order. Okay. So for example, if you're on this call and you've engaged lawyers to do your fund, you should stop that. That is like the last thing that you should do. If you're talking to some salesperson at like some fund admin shop, stop that. Okay. This is the kind of stuff that delays people from closing. And we see a lot of people get hurt in the program where they have to throw away hundreds of thousands of dollars of legal work that came out of their pocket in order for them to launch their fund because they did it incorrectly. So just stop it, right? If you're going to come into the program, and we're going to package everything together at the right time, at the right week. And then when it's the right time to sort of do that task, we'll go all in and do it. Okay. And that's why this happens. And that's why this works really, really well. Okay. Just to kind of give you a sense of scale, at this point, roughly somewhere between 40 to 50%, depending on what data you look at, of new managers and emerging managers are launching through this program. And this is happening all over the world. Okay. So if you're this isn't like an American program, even though I happen to be in the United States, 65% of funds that we're launching are outside the United States. So all the stuff, all the curriculum, everything we're talking about, okay, applies globally. And that's why it sort of works. And that's why everyone or most people now are sort of launching through the program. Okay. Over 400 venture capital firms have been launched to this entire experience. Okay. And it's working really, really well. Okay. So let's just go through a few benefits here, and then we can kind of get into sort of like your questions and things like that. So first of all, as I mentioned, you're going to have a very structured curriculum and approach. We update the curriculum every single cohort based on market conditions. So for example, if there's like a summer doldrums, right, for fundraising, we adjust the curriculum accordingly. If you're dealing with the holidays, like cohort 13, right, it starts before the sort of like the New Year's and Christmas festivities. We adjust the curriculum around that. We adjust the curriculum around limited partners and messaging and things like that. So every single cohort, the curriculum gets updated, right, based on market conditions and things we've learned from the previous cohort. Okay, so you're basically getting a benefit of all the 12 cohorts that came about before you, and all that knowledge gets sort of institutionalized into your program. You're going to get weekly mentoring. So you're going to do an AMA session with myself and Adeo, every single week. And then I'm going to host a mentor. Sometimes it's a general partner that, launched their fund through the program before you. Sometimes it's a limited partner, or sometimes it's an expert on a specific topic like fund modeling and things like that. So you're going to get 2 sessions a week with us. And this is all virtual. This is all online. Okay. In addition to that, you're going to join what's at this point the largest and most active community of new and emerging managers. And you're going to be working together with them. We're going to be putting you in working groups. You're going to be meeting people. And these are going to be the folks you're going to be doing a lot of deals with in the future. And so this is a great opportunity for you to sort of meet everybody and work together. And, we're going to facilitate a lot of networking throughout the entire experience as well. In addition to that, you're going to get access to Decile Hub, which is an entire end-to-end system for you to run your entire firm. So right now, what happens outside of this VC Lab experience, you kind of probably have seen this online. A bunch of people do what's called like the VC stack, and they're stacked together 15 different tools with the Zapier integration, which is just crazy, right? Given that you're managing millions and millions of dollars. We've already built that for you end to end. It works. It does everything you need. It's free. 500 active venture capital firms like 600 venture capital firms now are using it. So you basically have everything to manage your fund, email templates to send to LPs, everything to get connectors to work for you, deal memos, just everything that you need. And right now, there's over $50 million a month in LP commitments that are going through this platform into the funds that are being powered by Decile Hub. So just so you can kind of get a sense of scale at which this platform is operating, and you're going to get that as part of the VC Lab experience for free. Okay. In addition to that, okay, you're going to get continued ongoing support. We have an entire offering called Decile Partners that powers your entire funds, does all the fund admin, does all the business advice and things like that for you to build an enduring venture capital firm. That's application only, so only the top folks in the program are able to access that. But there's a reason for that. That's because if you're a limited partner, there's no safer firm to sort of invest in than one that's sort of managed by Decile Partners, just because the team sort of watches out over you and you have a super senior staff looking over you. Okay. And so if you want to kind of think about this on a high level, the entire experience end to end is sort of managed all the way through, right? So you have, the accelerator experience, that's free. You have, the tools, you have the back office, the admin support. And then once you close, the whole team sort of takes over, reviews your deals, gives you feedback on term sheets, have all sorts of operational playbooks, like how do I deal with, this venture partner that I'm trying to fire right now, right? Like we have all sorts of that already built in, and we have over 80 firms that we're managing. And then finally, to complete the whole stack, we have a fund of funds, okay, that invests in the best alumni that are coming through the program. All right. So, if you want to just think about this, the entire sort of life cycle, the entire operations of a new VC firm has been sort of modernized and been built together with all these firms that we've launched to date to build this like sort of great experience so that we can remove the barriers to entry into this asset class and to help people launch these sort of enduring venture capital firms. And the way we think about everything that we're doing is to get everybody to sort of fund 3. If you sort of join late, again, this is a program for founders of venture capital firms. So if you're building a business of venture capital, you can't just like do one fund. You need multiple funds under management. You need to make sure that everything's sort of working together. You need to be able to sort of build out a team around that. And so every decision that you make in fund 1 is going to affect fund 2, and it's going to affect fund 3. And so we're here to sort of get you to fund 3, because once you get to fund 3, now you become what's called an enduring venture capital firm. Fundraising becomes significantly easier. You're going to be in business for a very, very long time. Okay. So, we're here to help. Just in case you didn't know, final admissions for cohort 13 are on November 20th. You can go to govclab.com to apply. And I'm going to go ahead and just stop sharing now that I've sort of given you an overview of everything that's kind of available here as part of the entire, VC Lab experience. So happy to go ahead and answer your questions. Now, again, if you joined a little late, the best place for you to ask questions, because I'm not like monitoring the chat here, is in the Q&A. So there's a Q&A button at the bottom of your screen. Go ahead and start asking questions, and you can ask me questions about anything here. And then also upvote them, okay? Upvote them because I want to go ahead and sort of answer the most popular questions first, okay? So add questions into the Q&A. Happy to go ahead and help. So there's a question here from Yasir. When will we be added in the Slack community? Also, when do we get Decile Hub access? So the program doesn't start for a while, right? And so like I said, the final admissions are November 20th, okay? We have to finish those. And then when we start the program itself, there's going to be a 2-week sort of like onboarding experience that you're going to have. And as part of that, we're going to be adding you to the Slack community. We're going to give you access to the learning management system to access the curriculum and all the different tools. You're going to do a set of deliverables. And that's how the whole onboarding experience goes. Now, once everybody's been sort of properly onboarded into the program, then we start to, release access to, the SL Hub for the community and things like that. And we sort of help onboard you into that. All right. So it's sort of a process that we've kind of mastered over 12 cohorts. So that's the way it's going to work for everybody here. This question from ML. Assuming we don't get accepted into this cohort, can we apply to the next one? Yeah, so we have a lot of examples of people that have sort of applied, reapplied and got in. And so the way you want to think about it is as follows. So first, if you don't get in, no big deal. We run the program 4 times a year. Okay. And look, it's hard. Like there's almost 3,000 people that start applications every single time we run one of these programs, right? So it's, don't take it like personal. It's just a matter of volume and us making sure that we have the amount of seats available for everybody, so everybody has a great experience. And there is a technical limit to how big we can make these cohorts. Okay, as soon as if you get an email that you weren't accepted into this program, that's fine. We host a webinar basically like that week to help people improve their applications for the next intake. So make sure that you go to that, because our goal again is to try to empower as many people as possible to launch these VC firms as part of our mission. Okay, so just FYI on that, that's what I would do, and I would just apply. And again, I'm seeing people like adding questions into the chat here. We're not answering questions in the chat, everyone. Okay. With the nature of how difficult things are in the market, have you seen changes in the times of the funds and closing rates? All right, so sorry, rant / tangent time. Don't believe what you see in the press, okay? They have like really bad data. Like what are they building their data off of? They're building their data off of PitchBook. PitchBook has some of the shittiest data in the world, okay? And especially when it comes to early and like early stage anything, early stage startups, early stage funds, all that stuff. So they just have like really bad data. So just let me give you some other data, okay? Last month we had a record amount of limited partners committing to alumni, and it was in the 60+ million range in 1 month. Okay, so just to kind of give you a sense of like the scale here, right? So we're sort of operating on almost like somewhere between a 700 million to $1 billion a year being put into basically funds. Okay. So that's not accurate. Second thing that's not accurate is that, look, a lot of people in the media, what they're doing is that they're sort of bucketing the whole entire asset class as being like the same thing. And it's not, okay? You have like sort of established later stage funds that are, of course, being affected because they're more like PE funds and other kind of asset classes. And then you have like new and emerging managers who are targeting a different style of LP. Okay, if you're a new or emerging manager, you're not going to get institutional capital. You're probably going to raise it more from like high net worth individuals and things like that. So it's just a different fundraising cycle, right? And so for us in the community, we're not seeing any of that. Okay, like we're not seeing a slowdown. As a matter of fact, we're seeing an increase. So just to give you another sense of scale, all right, so cohort 11, which was the highest or best performing cohort today. We haven't finished cohort 12 yet. Okay. And then it did extremely well. And then cohort 12 came in, and halfway through the program, they have more commitments as a cohort than the entire cohort 11 alumni. Think about that, right? So it's not happening. Like we're not seeing any of this stuff, to be clear. But part of it is because we spent a lot of time also making sure that there's what's called GP thesis LP fit, right? So a lot of times people go out into the market and they're pitching like the wrong type of LPs. They have a terrible thesis. There's like no match. So that's why you hear these stories of people having to pitch 500,000 people to close their fund, because they just don't have that sort of like market fit. So we spent a lot of time making sure that people are not mistargeting LPs, right? They're not wasting time with these LPs that are going to like be detrimental to their funds. And that's the issue. So and that helps, of course, increase closing rates, and that's why the average person in the program is closing in like 6 months, whereas the average person outside the program takes 2 years, right? So rant over. Hopefully that was helpful. How will LPs do commitments into the funds? Through event pitch sessions, or how else? Like no. You can't pitch publicly. There's serious general solicitation issues. We'll put that in. No, you can't do it like this. You're gonna go talk to them one-on-one, and they're gonna subscribe to your fund if you have a great thesis. So basically, the way you want to think of it, Yassir, if 1 in 5, 1 in 5 LPs are saying yes to you, that's you have a good thesis. If it takes less than that, you're kind of toast. Okay. How does VC Lab get compensated for all these free services and quotes? No, I've been pretty transparent about that, Tim, right? So we have a fund of funds, right? So we make money with doing that. We have a back office offering that powers all the funds, all the fund admin and things like that you have to apply for. So we only work with the best of the best. So we make money off that as well, right? And so, there you go. Like we've got a really, really good business that's really well aligned with people being super, super successful, right? So this isn't like a freemium program. This is not a program that's designed to sort of, get people, as many people as possible into any of our premium services. Is the exact opposite, right? It's an epically amazing free program. And in order for you to pay us, you have to apply. Okay. So it's the exact opposite sort of approach there. What is the typical commitment of a successful attendee in this program? I'm assuming what you're, I don't understand the question, so I'm just gonna go high level here. So I don't know, for new and emerging managers, typical fund one sizes are $5 to $10 million. Okay. And we spend a lot of time in the program lowering people's fund sizes because a lot of people have very unrealistic expectations. So, that's generally what a normal fund one should be. Fund twos tend to be in the $10 to $20 million range. And again, this is global, like in some regions there's more, in some regions there's less. So hopefully that's helpful. What is the typical background of a successful graduate in the program? And what can we do to improve the chance of success? So there's a number of types of backgrounds that work, and these are sort of profiled on the Go VC Lab website. But before I go into that, think of it like this. Venture capital is a network business. If you're not an incredibly highly networked individual, you will fail as a VC. Okay, you will fail to raise money. You will fail to get enough deal flow. Like think of it like this: like I don't know, top VCs see tens of thousands of companies a month. Like, right, like not a year, but a month, right? Like now, that's not really a good bar for like a new and emerging manager, but even any good new and emerging manager is seeing 500 to 1,000 companies a month as well sometimes, right? That doesn't mean that all of them are on thesis or whatever, but at least that's sort of like the deal flow, right? And so you need to be very, very like networked in order for you to have a shot at becoming a good VC, like that's just part of the process, right? Now, what are the typical backgrounds? So we have angels that are sort of scaling up their practice to become, they're saying, hey, I like what I'm doing. I want to start an actual firm. So I want to found or start a new company that basically invests professionally and manages people's money. That's a good profile. Another profile is what we call a network leader. So these are folks that run accelerators or run conferences or have just this very large network, or a professor at whatever university, and they just have an enormous amount of deal flow, and they're always being asked to advise companies and things like that. So that profile seems to work really well as well. Another profile are, VCs sort of spinning out of their old firms into new firms. That's another profile that seems to work. And then, very successful entrepreneurs, tend to also do really well. But, there's always other types of folks as well. So there's not like one size fits all kind of an approach here. You mentioned that what we're going to learn will apply globally. But we were discussing how specific must our thesis be, knowing that there are not many pre-seed funds, for example, in LATAM. Wouldn't we be losing opportunities with LPs considering this issue? Just for context, there are 2 pre-seed funds firms in Peru and just 1 active. Yeah, Alberto, I think that's not accurate. Okay, at this point, we've launched half the new firms in Latin America, and if you're a new fund, you're most likely going to do pre-seed and seed. So I don't think that that's accurate. Okay, now like maybe in Peru, maybe, but like to say like in the whole continent, that's super not accurate. Okay, so there's a ton of pre-seed funds in LATAM right now. I would argue most of the funds that are starting in new in LATAM are pre-seed, and so that's how you want to think of it. So the way you want to think about your focus on your thesis is like where you're going to have sort of like a secret sauce, like something about you that makes you really successful. And maybe we can put the curriculum in the chat here for the audience as well, the pre-curriculum on that. And then you want to sort of think, is there enough sort of deal flow to make that work? So for example, if you're going to be very, very targeted on Peru, is there enough deal flow for you to do that? Or do you want to sort of expand out based on your secret sauce to the rest of the continent, especially the Spanish speaking side, because Brazil is a little different. Do you take carry for using the platform? No. As I said, the program is free. Okay, it's free. For anything that you have to sort of pay, you have to apply. Okay, so this isn't like a freemium business, right? There's no like catch, oh, we caught you with this later. Okay, no, it's like free and you have to apply to pay us. Okay. Can different VC co-founders attend the cohort, or is one application per VC firm? Yes, every single person in every managing partner. So in other words, every co-founder is going to have to create an application. Are venture studios also included in this program? Yes, and we have a venture studio track because venture studios are very different in the way you sort of think about it, and you've got a lot more issues with conflicts of interest and things like that. Could you talk about tools to help find and close LPs? Yeah, we can talk a little bit about tools, but that's generally not going to work like that, right? So this is why, by the way, a slight other rant. If you see any sort of people telling you that they're going to like help you find LPs, okay, you should always have red flags, always. Okay, first of all, in many cases or most cases, that's illegal. Okay, there's like serious issues with regards to broker dealer issues. So that's number one. But number two, like think of it like this, right? This isn't like a startup, right? This isn't like you have a product, you're a professional money manager. A professional money manager. So you're going to all of these wealthy individuals and you're saying, hey, wealthy individual or whatever organization, let me manage your money for the next 15 years because I can do it better than you can by investing it in the riskiest kind of things that there possibly is, which are startups. Okay. Like that's what, like, that's so who's gonna make that investment, Emil? Who's gonna make that investment? Who's gonna basically invest in your fund? Okay, it's gonna be people that you know, right? It's gonna be people that you know. The idea that some random person, okay, that has no idea who you are is gonna be cool with you basically managing their money for the next 15 years, even though you've never managed money professionally before, which is the case for most new managers, because they've might have like done a syndicate or something, but that doesn't count as like launching a fund, right? Is pretty low, right? So the way most first and second and even third closings happen is they happen from first degree and second degree connections in your network. Okay, that's just the way it goes. And so if you don't have a high enough network there, then what a better thing to do is sort of build that out and then maybe start the VC fund later, right? But that's where that's mostly going to happen, right? So it's not a tool situation, although obviously we've sort of built out the tools, the email systems, everything to kind of manage things, all the CRM, all the things. But like the key is that you want to target correctly. And I want to emphasize this to people because a lot of people are like hoping that there's some sort of like kind of magic thing that can happen where LPs are just sort of going to like appear and like fund their fund, and it's not. It's going to be primarily first and second degree connectors that are going to go ahead and do that. And of course, there's lots of things you can do to make that process easier, whether it's LinkedIn Sales Navigator, whether it's all the integrated features into Decile Hub, whether it's all the email templates that we provide you, whether it's everything, but it doesn't like stop the fact that you have to go to your first and second degree connectors, get on a call with them, and get them to basically commit to your fund. Okay. I'm analyzing the possibility of creating a VC fund. I expect the program will give me enough information to make a final decision. Does to actually close the fund at the end of the 4th month? Yeah. You'll exactly right. So look, this isn't a learning program. Okay, I want to be very clear. This isn't a learning program. Like, so if you're sort of applying to like learn about becoming a VC, this is not the place for you. We actually have a program called the Venture Institute that's really designed just for this, to sort of kind of teach like basics of what a VC is. This is a place to close your fund. Okay, and you're going to be in your case, Gerard, or like everybody, you're going to be actually getting limited partners to sign letters of intent to invest in your fund, not by the 4th month, but by the 4th week. Okay, so you could sort of understand that, right? Because you're going to have a thesis. And if that thesis works, then people in your first degree network, like I was telling Emil, are just going to say, hell yeah, I'm in. And they're going to sign a letter of intent right then. And that's how you know that the thesis works. And if they're not signing those, then of course the thesis probably needs a little bit of help. Okay. We were accepted into cohort 13, and I see that we meet every Thursday. How long are these meetings? Also saw somewhere there was a Tuesday meeting. And if so, how long are these meetings weekly? Okay. So all webinars are kind of like this. They're going to take about an hour. They're all going to be an hour. Tuesday's an hour. Thursday's an hour. Tuesday's an AMA with myself and Adeo, kind of like what we're doing here. Thursday is kind of more of an AMA with the mentor. Okay. In addition to that, you're going to be placed into working groups, and then you're going to be expected to meet with that working group every single week as well. And generally those take about an hour as well, and we facilitate that for you. What is the success rate of those who are in the program in launching their fund, and those which launch to go into fund 2 and fund 3, and how has that changed the current market? So Jill, you have to close to be an alumni. Okay, like so the success rate is to have to close. Like, so you can't be you can't, you will drop out, or we'll ask you to drop out of the program before we get to that point, right? So like this is like literally a closing program. So the success rate, I don't know, it's like 100% maybe. I don't know if you want to, whatever you want to call it. With regards to fund 2 and fund 3, it's a little too early to tell on that, just because we've only been doing it for 2 years. So it takes you can't start raising another fund until you've deployed usually somewhere between 50 to 70%, depending on what the legal agreements say, right? So just kind of, if you think about the life cycle of that, people are just starting to raise fund 2s and fund 3s now. And we have a good amount of folks that are on fund 2, but just, it's still too early to tell, kind of given most of the cohorts have launched recently. Is there one-on-one mentoring? So right now it's designed to be mostly group mentoring to begin with, but as we get farther into the program, there's more opportunities for that. How much of what VC Lab program is included in the Decile Launch Professional Services program? There's not much, right? It's a different product. So the Decile Launch, that's like sort of the formation, the closing, the help post close, business advisory, deal review, all that. So it's a different experience. Can we write about our VC Lab acceptance and the benefits in our LP deck, or after graduation only? Only after graduation. A lot of people will end up withdrawing, right? So I wouldn't do that until you actually finish and you actually performed well in the program. When does cohort 14 start? Next year in 2024? I don't know right now, Anna, but it's going to be in Q1, like, or probably like January type of time frame is what I'm guessing right now. What are the economics from the fund? A new manager launching. I don't understand your questions, but basically, here's how it goes. Like most funds are set up as 2 and 20. So you charge 2% management fees to your LPs every single year for 10 years. And then you get carry, which is 20%. So let's say that, just keeping this on a high level, you have a $5 million fund, and you basically, return 5 million on top of the 5 million that's already done. So 10 million total, right? So that the profit on the fund is 5 million. You get 20% of the 5 million, which is $1 million, right? So that's typically the economics of that. Okay. For early stage innovation, what is the VC LP expectation of return? There is no real expectation of return to deal, so you don't want to ever kind of have an expectation in general. But the way you want to think of it is like, look, there's other asset classes that you're competing with, and so and you're significantly more risky because you're basically funding startups. And so the upside needs to be much higher, than if I was to put the money in like an index on the stock market or something like that. So yes. Can we use AngelList, Carta, or law firm for fund formation, or do we have to use Decile? You don't have to use any of our stuff, Gabby. As I mentioned, you have to apply for all of our stuff. That being said, AngelList will not work for this because AngelList owns the fund, so you can't build an enduring VC firm on AngelList. Okay. Carta has a very mixed reputation, and again, we strongly don't recommend Carta, like strongly. And you got to be careful with a law firm, right? Because you got to work with a law firm that understands venture. But this is again why you shouldn't be making this decision until you have at least 20 to 30%, sometimes a little bit less, but 20% of the fund hard circled via letters of intent from limited partners. This is literally like the last thing that you should do. So if you're talking to some sort of aggressive salesperson at Carta, just stop it. Okay. Just put them on ice. Don't talk to them anymore. Go and get pacts, get people to sign up for your fund. And then when you have enough to actually perform a first closing, then start looking at the stuff moving forward. Okay. So, and then, we'll talk about that in the program as well. Okay. Would an emerging manager benefit from Decile launch if we were already successful in completing the VC Lab program? Again, they're different offerings. So yes, and we have a lot of emerging managers using Decile launch because again, it forms the fund. It helps you close it very quickly. Closing is a very stressful situation. We sort of hold your hand through that entire process, and so on. But that being said, Evan, and as I mentioned, you have to apply for all this stuff. Okay, this isn't like you just get it, right? Because there's a lot of bad stuff that happens with funds, and we don't want to be associated with that, right? This is a very kind of, think of it like a quality kind of offering. If you're an LP and you invest in the Decile Partners Fund, it's the safest kind of investment that you're going to make into a VC, right? And so, we take that responsibility very seriously. So we go through a process, right? This is the difference between us and like these sort of high sales kind of offerings that typically make a lot of mistakes, and we don't want to deal with that. Can cohort participants ask for warm intros to specific LPs if in the network of VC Lab? Yeah, for sure. And it happens all the time. And it also happens that, the network facilitates, investing in each other's funds, so that happens all the time. And, I don't know, 10, 15% of the commitments are sort of coming in network, if that makes sense. And that's also why we facilitate so much, so much interaction between cohort participants, right? Because a lot of your working group members are going to be the folks that are going to like help you and co-invest with you and so on. If one of the co-founders of the fund drops out of VC Lab, can the fund still launch? Is that a requirement for co-founders to apply regardless of advancement or acceptance? Yeah, so that's why we do it, Evan. So unlike a startup, having a fund manager leave a co-founder in a fund is existential. Okay, it's like you're dead, like the fund died. It's like it's a huge issue. It's not because you're owners of the fund. You're not like a startup with like vesting and all this stuff where the VCs can sort of, you can fix it, right? This is like a serious thing. So that's why we tell people to bring in their team into the program, right? Because the program is going to stress you out. It's going to, you're going to do a closing in 6 months. It's pretty hardcore. It's a lot of work, right? And you can test your relationship here before you go out and waste all this money with a law firm, back office provider, or whatnot. Okay. So that's the point. And this is why I started the talk saying, hey, if you are already in talks with like whatever service provider, just stop. Okay. Get to a point where you have the funds sort of hard circled. Okay. Now you for sure that this is going to happen. And now you can start looking at this and going at closing this with the right team. And it may not be a team. Okay. 66% of alumni are solo GPs. And that's great. Okay. Because the risk, and honestly, the risk of you getting hit by a bus is significantly lower than you starting a fund with a bad team that's going to sort of break up later. And, that's going to be an absolute disaster with regards to your limited partners that are trusting you to manage their money for the next 10 years. Okay. So use the program, stress out your team. And if you need to go solo, go solo. All good. No problem. And Ziki's asking me about why the whole team. I think I just answered your question as well, Ziki. But what we mean by whole team are managing partners, not venture partners, not like junior partners, not like associates. Okay, these are like the co-founders of the firm. Think of it like that. Okay. Are geography priorities based on concentration of VCs in the area? Would NYCRSF receive less priority to help even out the access to VC worldwide? No, like we look, the company's called Decile Group. Okay. And that has, owns the VC Lab Accelerator, that has the partners, the hub, all that stuff. So decile means top 10%. Okay. This is a quality like business. It's focused on the best of the best, the best. Okay. And so we don't care where they come from. We give everybody the same tools. We give everybody the same systems. We give everybody the same opportunities. And we let sort of the system help people sort of self-select. And as a result of this approach, the distribution is as it is, like I showed the chart in the deck. Over 65% of funds are outside the United States. Why is that? Because there's a lot of alpha outside the United States. Like half of Africa hasn't come online yet. That's a tremendous opportunity. And so that's how you want to sort of think about kind of how we're looking at this. This is about quality. This is about the best. This isn't about like location or anything like that. This is about folks that are going to be really, really successful. Okay. And then the system allows for that to happen. I don't understand your question, Evan, about decile partners. Again, you have to sort of apply for decile partners. So I'm going to just cancel that. You can rephrase it if you want, but I don't understand it. Is the 2% management fee, back office costs, raised before? I don't understand the question. Yes, sir. Sorry, dude. VCs charge a 2% management fee. Okay, that's what they do. As far as the decile partner stuff, Yasir, again, you have to apply for that. So we can talk about that when if you get accepted. Okay, um, so there's a question here from Anna for about cohort for 14. Again, it's going to be early June, January right now is what we're looking at for this, but we don't actually have a date for sure. Okay, so we'll let everybody know when that happens. Are there other programs by VC Lab targeting aspiring venture capitalists? If yes, how is that different? Any program focus on impact investing? So two questions here. So we have a program called Venture Institute that's focused primarily for folks that are like looking to get employed in the industry, right? By venture capital firms. As far as targeting aspiring venture capitalists, Anna, or Asma, sorry, every person that's in the program is essentially an aspiring venture capitalist. Okay, so I don't know, but it's like, they're serious about it. They're like, this is what I'm going to do with the next 20 years of my life, right? And so they're aspiring, but they're serious. And as far as the impact investing, yeah, like no, so no. But I would say that many of, if not most, not most, but many of the top performing funds have an impact focus. Okay. And look, this is a very missionary like pitch to LPs. Okay. They're like, backing Osma, right? And there's this thesis, and for emotional reasons, not like, this like mathematical equation of like how they're gonna like make money, right? And so almost all new managers look just as much like the missionary founders that they back, right? They're doing this for a higher purpose of them than themselves. They're doing this to make the world a better place, right? And that's why it's super exciting what's happening right now in venture capital and this sort of renaissance that we're sort of part of. And of course, in our programs, just because, every participant has to share the Mensarius Oath and has to have alignment around that concept, naturally, I would argue it's even more so, right? Where people are sort of missionary and want to have impact on the future. So hopefully that's helpful. Can you explain the boundaries of general solicitation? I mean, I can spend the rest of the call on this, Krill. We'll put an article in the chat on this, but basically you can't talk publicly about your fund until the whole fund is closed. So you do a first close, you can't talk publicly about it. So you can't be like on Twitter, hey, I'm raising this fund that's investing in this. Like, you can't do that. All right. So you just can't talk publicly about it. And you don't want to talk publicly about it. Okay. That's like cheesy, right? Like you have like the super exclusive like offering that's, where LPs are sort of like lucky to get a chance to talk to you. And you're over there like with like a form on like Twitter saying, hey, please fill in this form to like invest in my fund. That's like terrible, right? So it doesn't even help that much, even if you wanted to do that kind of stuff. But see the article we put in the chat. It goes really deep on this, and it's super important for everybody. If someone is accepted into Decile Group back office services, for the 25K flat rate, I assume it's for the next like 10 years or something. Funds are for 10 years, right? And so whenever you work with any sort of fund admin provider, you're going to basically sign up and you're going to have to like pay for like 10 years. It's the way it works with any sort of kind of process, any sort of vendor, everything, right? That's why you have to make sure you understand the business really well of venture capital. And that's why you have to have multiple funds under management so that you can actually build a profitable business. And that's why it can't be a one fund thing. And again, if you get accepted into that, we can talk more about it at that point. How many funds percent wise does Decile Hub have who have launched through Decile Hub and are with it 5 years later? I don't know, Anna. Like, I can't answer that question. The program's been around since for 2 years. So I can't answer that. Maybe 3 at this point. Sorry. How long does it take to hear from VC Lab after submitting the application for the cohort. Yassir, you keep asking these questions. I'm going to remove them. Okay. Like there's just like, I'm trying my best to help you, but I can't help you anymore. How long does you take for us to get back on, from VC Lab? So here's how you want to think of it. What happens with our process is that we get sort of nailed with lots and lots of applications at the end of the program, at the end of admissions. So right now it's the 20th is the admissions, the final admissions period. So I wouldn't be surprised if we get like 1,000 people. Okay. So what's going to happen? It's going to be a little slower, right? So you're probably not going to hear back from us, most likely till right like the week before, or right as we're about to start. And what ends up happening is that, we have to make some really tough decisions at that point, and that's how it sort of works. What are expenses expected for a participant? Like nothing. Okay. So we're not expecting you to spend money on anything. It's a free program. Also, for any sort of tools and systems, right? Once you get to a first close, the fund is going to pay for a lot of that. Okay. So it doesn't come out of your pocket. Okay. So, that's why, again, I keep stressing this, like, stop talking to vendors, guys, because like they're going to start charging you and you're going to have to pay for it before you have a fund, and your fund may fail. And now you're stuck with like hundreds of thousands of dollars in legal bills for because you made a stupid decision. Right. So that's why you want to wait until you have 10 to 20% $1 million or more in signed letters of intent from LPs before you start talking to vendors, right? Because then you can sort of negotiate and like, hey, pay for this out of the closing and things like that. So just think of it like that, right? Like just think of it like that. So most of your expenses in any sort of fund, right, are basically going to come from the fund. They're called fund expenses, and we can put that into the chat as well. We wrote an entire article on kind of what's a fund expense and what's not. Okay. So just wanted to kind of put that out there for everybody here as well. So in Krill, you can look at that when you want. So if you take anything out of this, stop wasting time with vendors. They're completely like, no, it's a complete waste of time. What is the motivation of VC Lab and for doing this program? Well, it's to fix the world, right? Like, I mean, most of the problems that the world has are not going to be solved by governments and organizations and nonprofits and stuff like that, right? They're going to be solved by really, really ambitious entrepreneurs that are going to build the future, and it's our belief that those are startups. They're going to be venture-backed companies. And I believe wholeheartedly that the next like Tesla is going to be founded by a woman in Africa, right? And it's going to, have a massive impact on society. I mean, think of it like this, like, cohort 11, I think we graduated almost 60 firms. Each of them are going to fund at least 25 companies each. And that's if they don't raise another fund. Right? So if we were to like die, the company were to die today, just the impact of that one cohort on like the future of humanity is like super profound. Right? And so what we want to do is sort of, open the barriers that the next generation of ethical venture capitalists that are coming at this for very missionary reasons, and allow people to sort of get into this practice so they can sort of finance the future for all of us, and so we can build a better world, right? And so that's the motivation of the VC Lab program, and that's why it started in the first place. We didn't have like a business, we didn't have a business model, right? And it's the community, right, that asked us, hey, this whole situation of managing these vendors and all this stuff is really hard. So, okay, so we built that. Oh, it's sort of super stupid for me to build out this VC stack that's like, cobbled together with like a Zapier integration. So we built that. Oh, it's really hard to, raise institutional capital. Okay, so we built the fund of funds, right? Like, so that's sort of how we built out everything, right? It's because we want to reduce all of this friction that a new or emerging manager has to go and start these funds, and as a result, make the world a much better place for all of us to live in. And if we can sort of align all of the incentives correctly, which is not happening right now, which is why most of the vendors are so terrible, which is why the lawyers are the way they are, which is why even some LPs are really bad for you, and they're going to totally mess up your performance because of their requirements, right? Like, what we want to do is we want to fix all of that, right? And like reduce the barriers so that you can be super successful. So everything is built around maximum alignment on your success, right? That's why even for anything that we sort of charge for, you have to apply, because we also have to be like, can we help this person build an enduring VC firm? Is that even like, is this possible given the constraints or whatever the case may be, right? And so we're sort of trying to align all incentives around cohort participants being ultra successful, right? Because, there was a question around impact earlier. Like, it's not enough for you to be an impact fund. Okay, if you go out and you fund a bunch of shitty impact companies, okay, like nothing's going to happen out of that, right? The way, or if you go out and fund like diversity, it doesn't matter. What you need is to fund like the best people, right, that are going to create the future. And then when that woman in Africa builds out the next Tesla, that she becomes sort of an inspiration for all the next generation of women managers starting, or women startups getting going, right? So that's why it's so critical to have performance. You can't have impact without performance. You need performance in order to have impact, right? And so that's how we're thinking about this. Like, we want to give you all the tools. We want to help you be super successful and make sure that you're really good at your craft so that you can stay in business, so you can be the next generation Sequoia Capital. And you can be the future of the way financing gets done. And you're going to be the one finding the next unicorn in Malaysia or Chile or whatever country you're in, right? So hopefully that's helpful for everybody. I think we're done with all the questions. Looks like I think we got through everybody. November 20th, final admissions. Try to get it in before that so that we have more time to review it. All right. Bye, everyone. Good luck.